All right. Hey, everyone. So we have Jim Steffler from Dominion Lending, the man himself, here with us
The
today.
legend.
Tell us a few things about mortgages and lenders and whatever he wants to. How you doing, Jim?
I'm good. I'm good. Whatever I want, eh? I might turn the questions back on you then.
Sure. I'll just go deaf for a little bit. So, Jim, the market has been crazy, huh? And interest rates, they had a meeting today, and
They did.
so nothing happened.
Well, big surprise, nothing happened. Um, big surprise. We're all shocked. Nothing occurred, which was kind of what we thought, right?
Yeah.
Um, I still think, I think June. I still think June could be July though, because some of the data that's come out of the U.S. lately has been not so bad. So it might push us into July. We'll see. But I think June. I really do. And it should come as no surprise for anyone what happened today. I mean, this was to be expected that they were going to hold rates. But there's no doubt the economy's softening. We can see cracks, and the data is there that we should see an interest rate cut soon. Let's hope it's sooner rather than later.
Yeah, for sure. And I've heard some other people talking about maybe between three quarters of a point to one point, which is 75 to 100 basis points. What do you think by the end of the year?
I think low and slow. I think like cooking in a slow cooker is what they'll do. I I think you'll see a quarter point. I think from everything I read, it wouldn't be shocked me if we're down 1% by the end of the year. But
Oh, wow.
I also think they are gonna lower it really slowly. So I think the first cut will be a quarter point, and then they'll do another quarter
Okay.
point, another quarter point. That's
Yeah.
what I think. That's what I think. I
Well,
think
it's
low
not
and
too
slow.
bad. It's a positive side. And even now, I'm sure you're looking at the market as well. Most properties are selling in multiple offers and over the asking price.
100%. I think it'll be welcome news. By the way, not to put my tinfoil hat on, I think another reason they don't want to cut rates just yet is because they want the spring market to play out. They want that natural, because it's the same in real estate every year. See a bit of a spring market,
Yeah,
spring subsides, and then the market cools down a little bit. I think they're waiting until the market cools down a little bit because the second you cut interest rates, I don't know what you think. I think we're going to see an uptick in activity. That's for sure, because a lot of people are waiting. So I think they naturally want the market to cool a bit.
for sure. And you're a native to Waterloo region, right?
I
So
am. I am.
you like seeing it in many phases, many conditions. Uh, I've been here since 1997. I've only seen it getting better. I'm not sure if you agree with me. Like getting bigger, market's getting better.
It's not the same city that I was born into. That's for sure. It's growing. Especially, what's always crazy to me is when you kind of head down in Waterloo, when you head down like Regina Street or kind of in that King Street area,
Right.
and see the high rises. I remember when I was a kid, my grandparents lived in there's one high rise in that area. My grandparents lived in, and now it's filled with students and just how vertical this city has gone. The great thing about Kitchener-Waterloo though is we just have such a good, whoever built that expressway, whoever decided to put an expressway right up the middle, best thing we ever did. So
Yes.
it's still easy for transportation around. So we're a big city, but you can still move around.
That's why I tell everybody, you can get anywhere from anywhere in town within 10, 15 minutes, I would say.
Yeah, 100%, 100%. I feel like I'm very biased in this, but of all the places I visited in Ontario, this is where I'd want to live, sure.
Yeah. So it's a good spot to be in and to invest in. So which brings me to my next question. A lot of people want to come down here and buy in the area. What do you think about investing in the area in terms of for people that want to invest in rental properties?
Yeah. Well, I think long term, I think Kitchener-Waterloo is a great investment opportunity. I really do. We're far enough away from GTA, close enough from the GTA. I think we're going to continue to grow, right? And there's just no way this area is not growing. So I think long term we're great. The storm you kind of got to weather is if you're an investor and you're kind of caught in a catch-22. It's hard to cash flow. That's the issue.
Yes.
Interest rates make it hard to cash flow. There's no doubt about that. But on the flip side, when they start cutting interest rates, I wouldn't be shocked if home values start going up. And I think we're all kind of expecting it. So it's kind of a catch-22. If you can invest now, and as long as you can weather the storm with that cash flow,
Yeah,
I think we're a great community to invest in. Or I think alternatively is, larger down payments, looking at duplexes, looking
yes.
at things looking at properties right now where you can at least try and get pretty darn close to it.
Yeah, I always said to my clients, you got to put at least 35% down in our area to break even on the monthly.
100%.
Yeah.
100%.
Yeah.
100%.
So we're on the same page with that one.
Yeah, and there's tricks too. You can do the longer amortizations help. So 30-year amortization on a rental. You can do whatever you can to kind of keep your payments low, weather the storm. And when interest rates go down a bit, then switch into a product where maybe you can cash flow a bit.
Right. Okay, that sounds good. How about you heard people still talking about investments. They want to get a deal, a house that needs renovation, or an as-is condition.
Yeah.
And I talked to many people before, and when it comes to financing, some banks they'll tell you an as-is condition not gonna get approved. What do you think of that?
Well, it depends on what type of mortgage you get. There's always a solution. It's just how expensive it's going to be, right? That's what I always tell clients. As long as someone has enough for down payment, as long as they have more than 20% down, there's almost always a solution up there. It's just how expensive is it going to be, right? Because there's two pieces to think there. There's, maybe you have to pay a higher interest rate to get that property done. But then there's you call it the burn rate, right? There's holding that higher interest mortgage while you're completing the work and while you're renovating. I think it's best, what I always tell clients is if you're looking at a property which needs some work, consult me because I can eyeball it and kind of tell them, whether a bank would say yes or whether whether they maybe have to look at some alternative types of financing.
Right. So
generally speaking, though, I can kind of generally speaking, though, if I use an analogy, banks don't care about dated properties. They're not worried about that. So if you got the grandmother wallpaper on the wall and, there's maybe a blue toilet, that's not the end of the world. If it's cosmetic, it just needs to be updated. Banks aren't worried about that. Where they do get concerned is if there's something structurally wrong or if there's something missing from the house. And I always kind of tease my clients there. And I always say, listen, could you get up in the morning? Could you use the bathroom? Could you brush your teeth? And then could you go make yourself breakfast? And if the answer to one of those is no, you're probably going to have trouble getting financing on it because it's missing a bathroom.
That's a good analogy. That's
right. If you can do all those things, generally speaking, you're pretty good. You're going to be able to get.
I'm gonna remember that one and talk to my
clients. Yeah. Full breakfast, by the way. You can't. It's not just pouring cereal. You got to make yourself bacon. And
full
eggs.
Breakfast, egg and omelet and bacon.
If you can do those things, we can usually get you financing.
Awesome. So that's actually a good point. And tell me a little bit about banks versus brokers.
Yep.
There is always this talk among people, and we heard yesterday in the news actually that some banks are telling their clients just don't go to the brokers because they can't match our deals. So
right.
I've been in the business long enough to know that this is not really accurate. What do you think about this? Like, what's the idea behind it?
Well, here's kind of an analogy again, which I like to use on this. Imagine you decide to book a hotel and all you did was just call the hotel. You didn't check Expedia, you didn't shop around, you didn't see anything.
Right.
Or if you went to book a vacation and you just called Air Canada and said, hey, Air Canada, book me a vacation, without looking at Sunwing, WestJet, and all those other providers. I always say the role of the broker is we are that. I can look at all sorts of lenders. So the rate, and by the way, that's baloney. I know I won't reveal the lenders, but there's actually lenders out there, banks, big banks, Where right now I'm seeing better rates through brokers for the same darn bank than going to their bank. So that's just, it's simply not true. But I always like to also paint a picture of, I think it's way more than just the rate. Rate's one thing, but the product is another. Different banks, different lenders look at things in different ways. And I can look through the eye of multiple lenders at once, because maybe your bank said no, but maybe I have a solution which would be a yes. Maybe the rate's slightly higher, maybe it's not. That's kind of besides the point. But I think as a broker, it's more about finding people that are right. So it's a little bit different. I'm obviously very biased. I think a mortgage agent or a mortgage broker is the way to go. And oftentimes, I'll even tell you, half the time we have the bank as well. So if a client, let's say a client is with TD or they're with Scotia, they can call their mortgage broker or their mortgage agent. I can do it through TD and Scotia, but I also have all the other lenders as well. So kind of a one-stop shop where, we know everybody's busy nowadays. Time's important too. And if you can shop one stop, I think that's a lot easier.
Right. Yeah. And you can tailor a mortgage that is specific to the client's needs as well. You don't have to settle for what the bank has to offer most of the time. Right?
Sure. Well,
Yeah.
I'll give a great example even, is it's not always about rate. It's always, sometimes it's about just even the product. And I'll use a great example. Lots of clients right now are going variable. So variable's back because clients are betting that we're at the top of the roller coaster and there's only one way down. So that's the bet. Did you know there's two types of variables? Most people don't know that. So there's a fixed payment variable where no matter where the interest rates go, the payment remains the same. And then there's something called an ARM variable or an adjustable rate mortgage, where as rates come down, your payments go down, or as rates go up, your payments go up.
Yeah.
4 of the 5 major banks just offer a fixed payment variable. So if you call up that bank, you say, I want to go variable, you may be thinking, hey, when interest rates go down, so is my payment. That's not the case. Your payment actually stays the same, just paying more off the mortgage. So oftentimes when you talk to a mortgage agent or a broker, we just have access to more products. It's more selection. That's all.
Yeah. Yeah. That asks you the right questions.
Your bank's product might not be the one that's right for you.
Oh. No, that's a great point. That's a great point. And me, as example, I'm not with a bank. So I'm with First National. And I love it because,
yeah.
So First National, you're a champion actually for First National, because I've heard.
I might do a little volume with First National. I might have given them $1 or $2.
Well,
hey, that's a great example of a great lender. It's a great example.
They have a good product, and they also have something I think called the insurance, or was it home warranty, that they can sell you on top of the mortgage.
They do. Actually, very, very cool program. They actually give you the first year free with your purchase, and then it's completely optional, by the way. You can opt in, opt out.
Yeah.
It's $18 a month, but it covers the heating, the cooling, the plumbing, and the electrical systems in your house, which that's a really cool benefit, especially if, let's say I'm a first-time home buyer. I emptied my bank account to buy them in the first place. Then I move in and I click on the furnace in the fall, and the furnace doesn't come on. Oh my goodness. Oh my goodness, right? But I have a warranty in place through my mortgage where I can get that looked at. And you and I both know they're gonna call their realtor and be a little grumpy at that too. So it's protection for all of us that they're looked after. I'll tell you, can I tell you a little story? Because it's kind of funny.
I can hear it again if I heard. No, I can hear it. Yeah.
So I had a young couple a few years back, and he was between one of the banks, and it was First National at the time. And his father had a good relationship with the bank. He wanted to go with the First National mortgage. First National had the free warranty. Also, it was just a slightly lower rate. And his dad was giving him the gift. And I remember saying to the client, I said, listen, for my money, I'd go with the First National, but I completely understand I don't have to be with your dad at Christmas dinner either. So if it's going to cause a fight, go with the bank money. And I was doing the mortgage, by the way, no matter what. It was either, I don't care. Go whichever way you want. And we ended up going with the First National. And sure enough, 3 months later, their air conditioner broke. And you remember during COVID, that moment in time when you couldn't get parts for anything, it seemed?
Yeah.
So they ended up replacing the air conditioner, which is a $4,000 air conditioner replaced the whole thing free. And I remember joking around with the client afterwards. I'm like, hey, like, is your dad still grumpy or is he okay now? And he's like, no, no, my dad would have paid for that air conditioner. So my dad was overjoyed. And then it's even a funnier follow-up, like 6 months later, my wife comes downstairs. She's like, hey, we got this wedding invite. She's like, who are these people?
Oh,
And
wow.
client
There you go.
invited me to the wedding. They
Nice.
didn't have they didn't have an open bar though, so we didn't know. But
Oh,
I
that's
joking.
okay. Thought it was good.
Yeah. But yeah, it was kind of cool. Kind of neat. Kind
I
of a
wish
neat thing.
I wish I had that product in my first mortgage because that story happened to me in the winter time. So with the furnace,
Yep.
not with the air condition.
Yeah, and I've even seen it for just minor things where
Yeah.
a small plumbing issue or whatever. By the way, there's lots of lenders which offer that. There's a few different lenders in the space which offer that as well. MCAP rings a bell off the top of my head. So there's lots of choice, but I think sometimes there's perks to, your bank just offers one product. Sometimes there's other lenders out there which offer cool
Yeah.
stuff as well.
Yeah. Sure. Let's talk about first-time home buyers. What
Sure.
kind of incentives are there right now, Jim? I know the CMHC program is scrapped, right?
Yep, now it's gone.
Yeah.
That wasn't popular.
No.
So that one's okay. We can say goodbye to that one.
Yeah.
The most popular ones is there's the first time savings account. There's the RSP that you can use your RSP for as a down payment. Those are very popular. And then the land transfer tax. That's really the big one, actually, is you get a rebate on your land transfer tax up
Yes.
to $4,000. So that really helps first time buyers.
Yeah. Well, it's very important to know. There was
One
a
thing to note too is just around insured mortgages. 'Cause sometimes, I think sometimes still I hear clients say, well, I'm trying to save up 20% because I know I need 20%. That's not true. You need 5% of the first $500,000, and then you need 10% of the difference, up
right.
to $1 million. So if I'm a first-time home buyer and I've saved $35,000 for my down payment, I can, as long as I can use all that towards my down payment, I can buy up to 600,000 purchase, as long as I qualify based on my income and everything else. My credit score is good, but yeah, there's lots of programs out there to kind of help get people into a home for the first time.
See a lot of first-time home buyers also getting help from family members towards the
Yep,
down payment.
yep,
So how does that work?
yeah. Gifted down payment's very popular. So as long as it's immediate family, like brother, sister, mom, dad, grandparents are usually okay. They can gift you money for the down payment. So they can hand you money. They usually sign a gift letter just saying, hey, it's non-repayable, right?
Yes.
Not paying back. And that's not a problem at all. I have many, many, many clients use gifted down payment nowadays. Lots.
Excellent. Well, that's good to know. A lot of people don't know these things, right? And they're stuck. Oh, how can we buy our first house?
The only thing to be cautious on, sometimes people call me and go, my buddy wants to give me 10 grand towards a house or 20,000. No bueno on that. It's gotta be family. And the reason, by the way, for that is the lender assumes, if you're getting money from a buddy, they assume you're paying that. You would have to be, because I love my friends, but I love my friends at, a beer at Brown Social House. I don't
Yeah.
love them, a $20,000,
Yes.
house. Right? So, right,
And
like that.
once you sign that gift letter, I mean, this, as far as the log is concerned, is not coming back.
It's a gift. It's a gift. So yeah, it's just as long as people remember, it's got to be family. That's
Excellent. That's good. We talked about a lot of stuff, Jim, but I was going to ask you about some lenders and if they have any different programs than other lenders, anything that uh, uh, that you really are excited about.
I get excited about lots of stuff. I think the main thing, which I would share, is just if you're looking for a rental, you really got to speak to a mortgage agent because the products out there vary so much between lenders in terms of how they'll consider rent or how they'll debt service those files. And there's just vast differences between lenders. And there's alternative lenders too, which sometimes they're called B mortgages. But if you don't qualify conventionally with a bank, there's all sorts of different products out there in the market. They might be slightly higher interest rates, but there's usually a solution to get it done, especially if people are looking at rentals. That's the one piece which I see most is clients just speak to the bank about a rental, get turned down. They give up their dream. Like, okay, guess we're not going to own a rental. When there's different products out there, which can really help.
Nice. That's good to know. One thing I wanted to talk about, a lot of buyers right now, they're looking, should I buy now or should I wait for the interest rate to drop and then buy?
Yeah.
Let's say somebody made an offer today and whatever the interest rate is, and then their closing is happening in 4 months. And then all of a sudden the interest rate drops. Can they go back and revisit their mortgage? Or is it locked in and that's it?
You mean, so have they already, like, you mean they're holding back before getting pre-approved or?
They're already pre-approved, they're locked in the rate, and they already made a purchase with the current interest rate. And all of a sudden, before closing happens, the interest rates dropped.
Darn right you can. By the way, this would be, I would say this is the number one reason not to toot the broker agent path. This is the number one reason. So there's something called a float down. And I'll use a real example. I watch rates every single day.
Yes.
And almost every lender updates the rates once a week, once every couple of days. You know, we do this. And if your rate falls before closing, absolutely, we're going to get you that better rate. Of course. Which, by the way, that's the best email I can send. Because usually I'll just be like, hey, your rate was 5.5, now it's 5.3. Have a great day. Like, how great is that? What a great email that is to pick up your phone and look, and that's the news you get. I think this is a big difference versus you. And, you know, at your bank might do it for you, but it's usually you which have to notice it. Okay. And you know, it'd be like if Best Buy put a TV on sale, it's up to you to notice the TV on sale on the fly.
Yeah.
Whereas I work for my clients. If I notice that their rate's going to be lower, I'll just get them it proactively and send them a message and get that taken care of. By the way, I would not sit back and wait for rates to fall. Especially if your closings now, not till like June or July. You're so far out, you might as well purchase now because we can always adjust the rate if they go down anyways.
Yeah. Yeah. No, it makes sense. Makes sense. That's a lot of good information, Jim. Jim, I want to thank you so much today. Is there anything that you want to add?
No, you know what? I just think I think you kind of alluded to it. I think if you're waiting for the Bank Canada rate drops, I mean, you know, it's going to happen, but you've been waiting a while. And then I also think the second that happens, I think it's going to pick up. So if you're looking now, might be your time to look. That's for sure.
Right. Oh, something just came up with mind, and a lot of people sometimes think, okay, how much is per 100,000? Just, you know, roughly, if somebody's looking at a 5% rate, does that mean it's $500 per 100,000 or not?
Here, I'll give you it. Give me a sec. I'll tell you the ballpark. $100,000 for the mortgage?
Yeah, let's say somebody's buying it and they
I
have
got a handy
700,000.
dandy. I got a handy dandy tool. 2 seconds. About $585 a month. There you go.
Okay. I remember the good old days when it used to be less than $400 per 100.
I know. It's a little pricier now.
Yeah, but that's okay. I mean, now it's better to buy and then wait and then refinance next year, I guess, at the lower rate.
Well, sure. You know, a lot of clients are locking in with shorter term strategy, right? You might lock in for a couple of years or go variable or take a 3-year, because 3 year is kind of a sweet spot right now where the rates aren't so bad. But there's all sorts of different strategies. And when rates, you're not going to be in the rates forever. Your rate's going to change. Even the folks, you know, I like to point out sometimes, even the folks who bought 2020 or 2021 when rates were super low, they're going to be up for renewal in the next couple of years.
Yeah.
They're going to be in the same darn boat as everybody else is. So rates don't last forever. The house hopefully does. So purchase based on what you're comfortable with. We can always adjust the rate down the road.
Nice. What is the what do you think of the stress test? Is that something gonna stay forever? Or are they talking anything about it? Like
I think it's going to stay for the time being. Yeah, I think there's almost no appetite to lower the stress test.
Nobody's saying anything about it. It's just gonna stay there. Okay.
Now, in fairness to the stress tests, and trust me, because I always want to prove people for the most I can. And the stress test hurt my soul at times. However, the stress test might have saved lots of people's bacon. Because even back when rates were 1.5%, 2%, we were stress testing people at 5.25%. And now that rates 5.25%, I think a lot of those folks were able to kind of survive and not lose their house or not be put in a tough position because they had to purchase at a higher interest rate. And even right now, the stress test rule is the rate plus 2%. So if you're buying right now at, you just use an even number, 5%, your mortgage broker has to test you at 7%, right? Just to make sure everything will be okay. So as much as the stress test hurts my soul some days, because it does cap people's affordability in terms of what they can afford, it did probably protect some folks in the
Right.
when interest rates went up. Right?
When it comes to a renewal, the lender usually sends you a renewal letter with a few options. Now,
Sure.
when these renewal letters come, is there like the lender, they don't go ahead and calculate stress test or anything like that?
Nope. The only time you get stress tests is if you switch lenders. So if you switch lenders, you're subject to the stress test all over again. By the way, there's some rules there where you might not, but just pretend you're going to have. So yeah, there's no fear there. And by the way, people get really scared of that. Like I've had clients call me like terrified because the renewal's coming up and they're worried they're going to have to requalify. No, as long as you've been making your payments, and, you're doing your half of the obligation. Lender, as long as it's a mortgage or a bank style mortgage, you're going to be renewed without any issue.
All right, that's good. That's good to know.
Yeah.
It is a stressful time when it comes to renewal.
It is. And by the way, though, don't shy away from shopping around. I'm very honest with clients which call me. Most of the time I can beat the rate your bank's offering.
Yeah.
Sometimes I can't. Sometimes I think for the amount of difference, it's just not worth it. And I'll tell them, hey, just renew how much. But I always joke around clients. It's 2 hours of being annoying because there's collecting paperwork and income documents and chasing this and chasing that. And you have to talk to me on the phone, all that stuff. But it's 2 hours of being annoying. But that annoyance could save you $5,000-$10,000 over a 5-year period. Well, that's worth it. I just think of how many people get mad at Rogers over $10 on their monthly bill. Whereas when you got something which could save you $10,000 over 5 years, I mean, it's worth 2 hours of Jim bugging you for documents.
That's $2,000 an hour right there.
It's not a bad return on investment.
Yeah.
Not a bad return on investment.
No, I get it. And you're right about the Rogers bill. They spend hours with the with Rogers.
Yeah, hours fighting with Rogers over their cell phone bill.
Yeah.
If they call me, I can maybe save them 10
That's
grand.
good stuff. Well, this was very informative today, Jim. I really appreciate your time.
We'll do it again.
How can people get a hold of you?
Yeah, you can look me up, Jim Steffler. Give me a Google if you want. That's a great way. Find me on Instagram. I'm on there too. For all the young people out there.
You're everywhere, okay?
I am, yeah. Search for me.
Perfect. Excellent. So I'll add the information later on, but we appreciate your time today, and hopefully we'll get a lot of calls from this.
Hey, yeah, why not? That was fun.
All right. Thank you, sir.
Cheers. Take care.